Hello, everyone. Welcome back to the Minute Markets podcast. My name is Sofia Cruz, and today I have a really special guest. Her name is Estelle O, and she works as an economist in Bloomberg. But before I start asking her all the questions, I would like for you to introduce yourself to our audience.
Yeah, thanks, Sophia. Thanks for having me here. So I'm Estelle. I'm an economist at Bloomberg Economics right now. I've been there for roughly 2 years, just covering the U.S. economy for our Bloomberg clients and terminal subscribers. Before I was at Bloomberg Economics, I worked at the U.S. Treasury Markets Room, where I served as essentially the eyes and ears of government on Wall Street. So my daily job was, to talk to market participants, understand what they're thinking about markets, and then sort of collect those thoughts and then regurgitate it back to the secretary and a lot of senior officials. So I did that, follow markets essentially for roughly 3 years. And then before that, I was a research assistant actually at the Federal Reserve Board here in Washington, D.C.
Yes.
Did that for, roughly 2 years. At the board, I mainly covered capital flows between the U.S. and essentially the rest of the world. So think, if Chinese investors want to purchase stocks or bonds, U.S. stocks or bonds, that would be recorded as a transaction, and then vice versa as well. So my entire job was to just monitor these capital flows that flew everywhere across the world for a couple of years, and for the board to conduct appropriate monetary policy.
Oh, so you've been watching the market super closely since the very beginning of your career?
I wouldn't say very beginning, but a little bit, a good portion of it.
Okay, but that's a good portion of your life that you've been doing, paying attention to whether these transactions or because you were telling me international markets.
Yeah.
And then being on track of what people in Wall Street are saying, right? And then now you're paying attention to the more macroeconomic side.
Yeah, exactly. I'm definitely a little bit removed from markets now.
Okay.
It doesn't mean that what happens in markets doesn't affect what the analysis we put out. It does a lot of times. For example, something I noticed when I was working in the markets room is that a lot of markets are moving every day, but most of the time they're pretty steady until something big happens, like a data release. So when inflation data comes out, you'll see yield spike if it's hot. Equity markets fall depending on what that does to the Fed expectations for the Federal Reserve's policy rate path. And the driving factor behind those market moves, which I monitored when I was at Treasury, is the data. And what I realized is if you understand the data and how to forecast it or how to interpret it, you're kind of ahead of the market. So I kind of, in a way, jumped from monitoring markets to predicting what could affect market moves. So I would say that's kind of where I've shifted my career a little bit from just watching markets most of the time, like you said, to now looking at taking a step back and looking more at what's driving markets and whether it makes sense, honestly.
Yeah. So you're looking through what's driving markets, and currently, do you think that the data that we're looking at, since it's not updated currently because the government shut down, or do you see this affecting you, and which indicators are you not getting?
Yeah, so we're in a data desert now, essentially, right?
Oh, God.
With no CPI. I mean, we get CPI tomorrow, but it's delayed tomorrow. But you'll notice that it was supposed to come out last week or a week prior. You notice that usually if there was a data release, you'd automatically see market reaction because what do we have next week? We have a Federal Reserve meeting, right? Yeah. So if that data had come out on time, then markets would have shifted their expectation for the Federal Reserve's meeting next week. But because there's a dearth, you notice, I'm sure, Sophia, you've been following markets very diligently. There's not much going on because markets don't know what to react to. Mm-hmm. So it's a bit of a struggle right now for markets, I think, to find direction. I think earnings season is very much in full swing, so there's a
Yeah.
bit of market moves from that. But mostly people are waiting for the data.
Yeah, the
And this just
data.
shows you, yes, there's market moves, but at the end of the day, it's the data that drives it. So that's why understanding what to look at for when there's a data release and knowing what which direction the data might flow through the forecasting process, I think is even more important than just monitoring markets.
Yeah, that's what they say. Like it's cool to talk about markets sometimes, but then when you have to do the forecast or predict what could happen, that's when it becomes like a mind game. Like you don't, and I mean you have a lot of experience here, but like us as students, sometimes it's like a mind game. Like, are they actually going to cut rates or are they not going to cut rates, right? So it becomes kind of like that. But you said CPI. What about like non-farm payrolls and all that?
So that's the data that's really been delayed, right? It was supposed to come out earlier this month. It usually comes out the first week of the month, first Friday of the month. It didn't. And that's a problem, right? Markets, again, had nothing to react to. There was a big... and what happens during this period of time when there's no actually official data to react to is people really turn to alternative data indicators. So I don't know if you guys are familiar with the ADP report. There are private payrolls company that releases data on how many jobs were added in the private sector every month. That comes out before the official NFP data comes out. So what happened this month was the ADP report came out weak, extremely weak, leading a lot of investors to think that the labor market is weakening. This means the Fed's labor market mandate would have to be prioritized. But what we know about alternative data is that it's really, really volatile. So just because an alternative data indicator comes in weak, that doesn't necessarily mean that it's a full picture. A lot of times with alternative data, it's just a sliver of the U.S. economy. It's not the aggregate picture that the NFP report provides. But what happened this month was the ADP report came out weak. Everyone was waiting for the official data to confirm the weakness. Of course, what happened? We didn't get the official report. So we're kind of in a data limbo right now where markets really don't know what to react to. And we're left with a lot of alternative data indicators that are frankly quite noisy. But again, this goes back to my point where knowing the data and having data is extremely important. And right now, the government shutdown is actually making not just my job difficult, but equity market traders, this job's very difficult as well.
It's like the uncertainty of like, are they actually going to cut rates, or at the end of the day, it's the effect such rates have in the market overall. Like how about like the S&P 500, right? How are they going to react to this, or are they not reacting, right?
Right.
Yeah, but you must, because you're telling me you're going for alternative indicators currently, right?
Yeah.
Do you ever look at alternative indicators when you have the regular data coming out?
Yes, that's how we forecast.
Oh,
so the trick about forecasting is you're going to learn a lot about, fancy models, error correction models, VARs, all these things. But at the end of the day, you just have to remember that forecasting, a lot of it is just about finding another data series that tracks the official one or tracks what you want to forecast really closely and comes out a little earlier. That's the secret to forecasting, in the sense that, you always you're trying to find proxies that track the official data. Of course, there's some modeling work that you have to do to translate the alternative data to the forecast. But the gist of it is as a forecaster, you're always looking at alternative data or trying to find some sort of other forms of data to track the official one. So alternative data has always been important, but it's even more so now with the dearth of official data.
But when you do these forecasts, like I really wonder, like, how's your day like? Because some people think, oh, you're an economist, like maybe you go and you like ask questions directly to the people, or maybe they confuse it with the job of perhaps a reporter. And so how's like your day-to-day like? Is it different than what people think, or?
Yeah. So actually, I'm not going out and asking questions. People are coming to me for questions.
Okay.
And that's actually how I do my job. as an economist, you're given, a lot of tools for analyzing data. At Bloomberg, you're exposed to a lot of data. It's almost like a fire hose. And the only way to cut through all that information really is to, focus on a question that you want to answer and then go from there. So really, at Bloomberg, when I start my day, I'm usually trying to, if clients aren't, messaging me with questions, I'm really trying to think about what questions might clients have for me. That's really usually the starting point for any analysis that we put out. So right now, I'll give an example. Clients are asking me about changing the effective tariff rate passed through to U.S. consumer prices, because that's what everyone wants to know. To do that analysis, you have to, dig into a lot of data. It's not always clear cut. Clients wouldn't be asking me the questions if there was no, if it was easy to find out.
Yeah.
But essentially, my job is to, provide some form of clarity to clients on when this pass-through will come, or whether it's even peaked, to help them, sort of digest the mountain of data that is available on the terminal. Yeah, essentially my day-to-day at Bloomberg, contrary to, what many people think about me going out there to talk to people as a reporter would, it's mainly motivated by questions to me.
Okay, yeah.
Because, like I said, there's a lot of information out there. And what people value actually is someone who can, wrap a bow tie around this information and, present a coherent, cogent narrative for them.
Yes, and I mean, you must have practiced that since you were working with the secretary, right? Like you were telling her, like, oh, this is the cohesive way to, that this is what people in Wall Street are saying.
Yeah.
And now you're saying to your clients now, this is, you wrap your report around like one main central question.
That's exactly right.
Okay.
And I do feel like this is something that, I learned mainly on the job. And it took me a really long time to, realize that you need to start with a question. That having a question in mind is actually critical to doing any kind of analytical work. When you're taking, econometric classes, finance classes, you're given all these tools, but you're not giving any questions. I mean, you are given questions, but you're given these questions by professors, and most of these questions have already been solved. So you don't even really get to practice answering these questions. You get to practice the answers to the questions, but you don't actually go through the exercise of thinking, well, how should I answer this question? What framework should I use? Which tool should I pick to answer these questions? Right now, if you're taking, international trade theory or any econometric classes, you learn about, the endogeneity problem. You learn about I'm sorry, it's been a while, but you learn about a lot of different ways of getting through measurement error problems. But what exactly are you trying to measure, and why are you even trying to measure these things? There's always a bigger question, and I think practicing to think of what question you're trying to answer really helps, you ground yourselves and provide value to, clients or investors or to any direct report really that. It really helps you provide value to people.
Yes, and that is so true. I know that you as a professional have to deal with this in real life, but maybe one as a student, like sometimes you have to give a presentation, but it's like, oh, I have so many points to talk about, and it's like, what am I actually trying to answer, right?
Exactly. So when you're presenting, you always want to have, what do I actually want? You always want to ask yourself, what do you actually want your audience to take away? You have so many points, so much data. Actually, people can get data themselves. You just have to remember, actually, people have no trouble finding data themselves. It's the interpretation of the data that is rare, and that's what they're listening to you for. So it's essentially there's a couple of ways to brainstorm what you want people to take away. Either there's a question that you have an answer to, and you want people to know the question and know the answer, or you're really just trying to provide context for the people to themselves dive into the data. So when you're presenting, yes, there's a lot of data. I know I made this mistake when I was a student. I just would sometimes, describe the data. That's not really a added value our audience is smart. They can get the data themselves. It's the interpretation on top of it that, really makes a difference between different analysts.
Exactly. And I mean, you're now analyzing you're analyzing for a lot of clients, right? But since the very beginning of your career, you've been doing analysis and you've been interpreting this data, you've been forecasting, but now what has been the biggest lesson you've learned in this entire journey?
You have to have a question. I keep coming back to this point. That is the biggest lesson I've learned. And the second thing I learned is most of the time, clients, at least in my field, they're coming to you not just for an answer. They're not coming to you just for a forecast. They're coming for you for a narrative as well, a way of making sense of the world. So what do I mean by this? And I'm talking about just my profession. Every profession is different. When I give a forecast, for example, for say, non-farm payrolls, and I say, non-farm payrolls are going to come out at 56,000. That's a relatively weak number. I don't stop there. Because again, I'm just providing, if I had stopped there, I would just be providing a number. And numbers are everywhere these days. There's a number everywhere. The value I provide is the story around that number. So what does the 56,000 NFP number mean? Well, underlying, there's, a softer labor market where quits rates are low, hiring rates are low. There's not a lot of turnover. So the labor market is definitely softening from, a year ago, largely due to, tariff uncertainty, sluggish credit growth because of restrictive rates. There has to be a story around the forecast. And so we spent a lot of time at Bloomberg, not just providing forecasts or model results, but really understanding the economic theory or framework that would make these forecasts make sense for our clients. And then the clients themselves will appreciate this framework. They may not always agree with you. Don't get me wrong, we're not always correct. But this is the added value interpretation that we provide at Bloomberg and as an economist. So I think you'll notice this even in academia, where when economists are writing paper results, they always they don't just present their nice regression table. They provide a story about the underlying explanation for why their results are the way they is. It's always about having a coherent narrative and never just giving the numbers out there.
Exactly. Like the narrative is what you sell to your clients.
Exactly. You got it.
Exactly. And I mean, you've been working at Treasury, the Fed, now Bloomberg. It's all been wrapping, I'm now realizing you've been working towards an entire question. Now all the different that could be related to any forecast that you have to do.
So that's kind of how I don't know if this was intentional, but I kind of, as I climbed throughout my career, I was exposed to questions, yes, but then I kind of realized that I didn't have the analytical skills or the knowledge to answer every question to its fullest. In the sense that, so when I was at the Fed, I learned how to code. I was exposed to a lot of questions, and as an RA, what you do at the Fed is you're asked to code things up. You're asked to code charts up. And that in itself is a skill to eventually answer your own questions about the world, the economy. But then I realized I didn't really understand what I was exactly coding up. So what I realized after 2 years at the Fed was I needed to build my actual understanding of financial markets, or why was it that there was a influx of foreign money into U.S. stocks. What do they see in it? Is it just
Is the USA or
is the U.S. just equity? Why is the U.S. equity market always growing? As a research assistant, I didn't have the skills or the background knowledge to answer this question. So in my next job, I specifically went for a job that would help me understand this a little more, which is the Treasury Markets Room, and that kind of helped me understand, what made markets tick, how to, monitor markets so that there's a coherent narrative. You look at, the four major asset classes. There's commodities, fixed income, FX, equity markets. You kind of realize that they all kind of move. When there's a coherent market narrative, that they kind of move in sync with each other. So I gained that skill. So I learned how to code to answer, questions, or just to better answer questions. Learn about markets to answer questions about markets. But then I didn't really know. So then this goes back to my point about the difference between monitoring markets and knowing what drives them. I didn't really understand the thing that drove them, which is the data. So then I went to get a job that helps me understand the data itself. So in every step of my career, I've really tried to just keep gathering skills to help me answer questions about the market, questions about the world that I just didn't feel like I had a good understanding of yet. Can't say I'm there yet. Can't say I fully understand everything, but I think I'm gradually getting closer and closer through just being curious. And, to have a question, you need to be a little curious, right?
Curious,
Yeah.
yes.
In economics, if you're ever trying to prove that something is driving something, you always have to think about a way to get to the counterfactual to prove it, right? Yeah.
That is great insight. Now, our audience, of course, is going to learn a lot, that in order to have an assumption, or have a statement, you need to have the background about it.
Yeah, the
Yes,
counterfactual.
The counterfactuals.
Yeah.
Thank you so much, Estelle. Thank you for making time to spend with us today. And I'm just so happy you had time to be here with us.
Yeah, pleasure to be here. You guys are great.
And I will say bye to the people listening at home. Thank you so much for staying until right now. As your comments on what you think about the markets as well.
Thanks, everyone.